Welcome back to StockAnalytics.ai, the podcast that breaks down complex earnings reports into actionable insights. I'm your host, Anthony.
And I'm Cleo, your lead analyst. Nike's Q4 2025 earnings are just out, and this is what you need to know.
Today, we're diving deep into Nike's fourth quarter earnings for fiscal year 2025, dissecting the numbers to understand what it means for investors. Cleo, what were the headline figures?
Nike reported revenue of $11.097 billion, a decline of 12% year over year. Earnings per share, that's EPS, essentially how much profit the company made for each outstanding share, came in at $0.14, a significant drop of 85.9% compared to the same quarter last year.
Wow, that EPS drop is substantial. So, Cleo, overall, was this a strong, weak, or mixed quarter for Nike?
This was definitely a weak quarter for Nike, highlighted by those declining revenue and EPS figures. Net income, the total profit after all expenses, landed at $0.211 billion. This, combined with an operating income of $0.318 billion, paints a picture of a company facing some headwinds. Their operating margin, meaning how much profit they keep from each dollar of revenue, sits at a low 2.9%, further emphasizing the challenges they're experiencing. The net margin, which shows the ultimate profitability after all expenses, is even lower at 1.9%.
The CEO mentioned win now actions. What did they have to say about the overall results?
CEO Elliott Hill acknowledged the results are in line with expectations, but not where they want them to be. He emphasized the ongoing win now actions and expressed optimism for improvement in the coming year, highlighting a new strategy called the Sport Offense to reposition the business for future growth. This involves focusing on key sports, product portfolio development, and connecting with consumers.
So, Cleo, let's break down the revenue picture further. What were the performance trends across Nike's different segments?
Nike saw declines across all its geographic segments. North America, their largest market, brought in $4.703 billion, down 10.9% year over year. Europe, Middle East, and Africa generated $3 billion, an 8.9% decline. Greater China revenue dropped significantly by 20.8% to $1.476 billion. Asia Pacific and Latin America saw a decrease of 7.6%, reaching $1.575 billion. Finally, Converse, their subsidiary brand, experienced a substantial 25.6% drop in revenue, totaling $0.357 billion.
Across-the-board declines, that's concerning. It seems like the challenges are impacting all areas of their business. Now, let's talk about profitability and cash flow. How efficiently is Nike converting sales into actual profit? And what does their cash position look like?
As mentioned earlier, the operating margin is 2.9%, and the net margin is even lower at 1.9%. These figures clearly indicate the pressure on Nike's profitability. Regarding cash flow, the report doesn't provide specific figures for operating cash flow or free cash flow. However, we know from their balance sheet that they have $7.464 billion in cash and equivalents. This is a crucial metric because it provides a buffer against further economic headwinds and allows for investments in future growth initiatives, particularly as they navigate the current challenges and implement their win now strategy. We'll look for more detail on the cash flow statement when it's released. The company also reported shareholder equity of $13.213 billion, which represents the residual value of the company's assets after deducting liabilities.
So, a healthy cash reserve, but definitely some work to do on the profitability front. Chapter 4, Outlook and Investment Thesis. Cleo, what's Nike's outlook for the future?
CFO Matthew Friend acknowledges the significant financial impact of the win now actions in Q4 and expects these headwinds to moderate going forward. Management is focusing on navigating the current uncertain environment and executing these actions, expressing confidence in their ability to do so. While specific financial guidance wasn't provided in this release, the company emphasizes its focus on the sport offense strategy, which they believe will reposition them for future growth. The key areas of focus include distinguishing themselves in key sports, building a comprehensive product portfolio, and creating narratives to connect with consumers. They also highlight the full-year revenue, which came in at $46.3 billion, a 10% decline compared to the previous fiscal year. This provides additional context for understanding the current performance within the broader annual trend.
So, Cleo, given everything we've discussed, what's your final takeaway for investors on Nike?
Nike is clearly facing some headwinds, evidenced by the declining revenue and profitability across all segments. While the company's cash position provides some stability, investors should carefully consider the ongoing impact of the win now actions and the effectiveness of the new sport offense strategy. It's crucial to track the company's progress in addressing these challenges and look for improvements in key metrics like operating margin and revenue growth in the upcoming quarters. Considering the industry-specific context, factors like macroeconomic headwinds, input cost inflation, and geopolitical risks could further impact Nike's performance, and investors should monitor these factors closely.
That's all the time we have for today's earnings analysis. Thanks for joining us on stockanalytics.ai.
Remember, this discussion is for educational purposes only and not personalized investment advice. Be sure to do your own research and consult with a qualified financial advisor.
Subscribe to our channel for more institutional-grade earnings analysis. Until next time.